Hello everyone, welcome to my YouTube channel. At this channel I upload informative videos about binary option trading. If you want to try this platform, get link below in description. If you want to try free signals for binary option, get free signals link in description. You can copy my trading strategy by watching my videos completely. So don't skip the video and copy my strategy to become a profitable trader. Dear traders, in this video, I am going to explain about trading. Please listen my words carefully. No matter you are a binary option trader, stock market or forex traders. Trading is the act of buying and selling financial instruments such as stocks, options, futures, and currencies, with the aim of generating profits. Successful trading requires a set of skills and knowledge, which must be mastered to navigate the complexities of the financial markets. In this explanation, we will explore the essential trading skills that every trader should have to succeed in the markets. Risk management. Risk management is the foundation of successful trading. The financial markets are inherently risky, and traders must learn how to manage risk to avoid significant losses. Risk management involves setting stop-loss orders to limit potential losses, diversifying your portfolio to spread risk, and using proper position sizing to ensure that losses are kept at a minimum. Traders must also have a deep understanding of the risk-reward ratio, which refers to the potential gain or loss of a trade relative to the amount of risk taken. It is critical to only take trades that have a favorable risk-reward ratio to ensure that profits exceed losses over the long run. Technical analysis. Technical analysis involves using charts and other technical indicators to analyze the price movements of financial instruments. Traders use technical analysis to identify trends, support and resistance levels, and potential trading opportunities. Technical analysis is an essential trading skill that allows traders to make informed trading decisions based on historical price data. Some of the essential technical indicators include moving averages, relative strength index, RSI, and Bollinger Bands. These indicators can help traders identify potential trading opportunities and gauge the strength of trends. Fundamental analysis. Fundamental analysis involves analyzing the economic, financial, and other qualitative and quantitative factors that affect the value of financial instruments. Traders use fundamental analysis to evaluate the intrinsic value of an asset and determine whether it is overvalued or undervalued. Traders must have a deep understanding of macroeconomic indicators, such as gross domestic product, GDP, inflation, interest rates, and employment data. They must also stay up to date on company earnings reports, news, and events that could affect the price of an asset. Trading psychology. Trading psychology refers to the emotional and mental state of a trader when trading the financial markets. Emotions such as fear, greed, and overconfidence can cloud judgment and lead to poor trading decisions. Traders must learn to manage their emotions and maintain a disciplined approach to trading. They must also develop the ability to stay focused and patient, even in volatile market conditions. Successful traders are disciplined, patient, and able to maintain a long-term perspective. Strategy development. Trading strategies are a set of rules that dictate when to enter and exit trades. A trading strategy should be based on a trader's risk tolerance, trading style, and the financial instrument being traded. Developing a trading strategy requires a deep understanding of the financial markets and the ability to analyze and interpret data. Traders must also be able to backtest their strategies to determine their effectiveness in different market conditions. A successful trading strategy must be flexible and adaptable, as the financial markets are constantly changing. Continuous learning. The financial markets are constantly evolving, and traders must keep up to date on the latest market trends and developments. Continuous learning is a critical trading skill that allows traders to adapt to changing market conditions and stay ahead of the competition. Traders must be willing to learn from their successes and failures and continuously refine their trading strategies. They must also stay up to date on the latest trading tools, technologies, and software that can help them improve their trading performance. Conclusion: trading requires a set of skills and knowledge that must be mastered to succeed in the financial markets. Traders must have a deep understanding of risk management, technical and fundamental analysis, trading psychology, strategy development, and continuous learning. Success in trading is not just about making profits, but also about managing. Subscribe my channel for more informative videos. Wish you all the best.